But, Brad, you recently posted on X that U.S. export controls banning NVIDIA in China is a mistake. Why?
Well, think about it this way, Maria. We're in a global arms race for AI. Just like in the age of the internet, we need to diffuse American technology out into the world. We want the world running on the American AI stack, which is why the president's repeal of the Biden diffusion rule was so important. His deals he struck in the Middle East so important. And it's essential that Howard Lutnick and Commerce do not replace the Biden diffusion rule with another set of complicated regulations that would slow down American AI around the world. And when it comes to the export controls on NVIDIA's chips in China, think about it this way. NVIDIA's business in China is a $40 billion business. They have over 80% market share in China. They're pinning Huawei down in China. We want to compete with them in China. We want to compete for every Chinese developer. We want those tax dollars to come back into the U.S. Treasury and back into NVIDIA's coffers to stay in the lead globally.
Well, we just don't want them to steal intellectual property as they've been doing for decades. But, Brad, all great points. Great to see you this morning. Thank you, sir.
And you have a number, Jim, of names within the tech complex that continue to rise.
And of all stripes, frankly. So I'll start with NVIDIA, which is everybody's favorite, right? I mean, what is it, about 6% from an all-time high? Much like the market, I think it's just going to get sucked up there. And once it hits that all-time high, again, Gary, FOMO, it happens. But if you want to look, and basically, whether it's the market or the technology sector, this is a stock picker's market. So if you're somebody like me, you're looking at stocks that are value tech, but which are doing phenomenally well. You can look at a Cisco Systems. You can look at a Qualcomm. You can look at a Google, Alphabet, which we've been talking about a lot in the past few weeks as a value tech stock. But stocks that are starting to work, so you don't have to just kind of hold your nose and buy the most expensive technology stocks out there. As I said, all stripes of technology stocks are working, and for the very good reason that that's where earnings growth is.
And U.S. tech firms have been deepening ties to Gulf states, investing heavily in AI. With tensions up in the Middle East, Deirdre Bosa digs into the risks of sovereign AI in today's Tech Check. Hi, Deirdre.
Hey, Kelly. So sovereign AI, and that is, to remind you, countries that want to build their own AI systems. It hasn't always come with a clear business case. In many of these cases, they were government-led projects built for political prestige rather than commercial demand. And the Middle East is a perfect example of this. Last month, when President Trump was over there and deals were being signed left, right, and center, it looked like a gold rush, billions in commitments, data centers, chip sales. But many of those deals, they were top-down political agreements. And unlike the sturdier, more durable demand from hyperscalers, or global enterprise demand, government priorities, they can shift really fast, or they can even be pulled entirely if geopolitical tensions escalate. So for investors, this could mean a repricing across the AI trade. For some of the biggest beneficiaries of the latest sovereign AI Gulf deals, think NVIDIA, AMD, Amazon, OpenAI, Microsoft, those tailwinds, they could turn into a headwind. Now, one area where spending could be more durable is defense. Names like Palantir, Anduril, they've been riding a different kind of sovereign wave, military contracts and intelligence partnerships, spending for strategic advantage and not national prestige. So as tensions rise, Kelly, the case for defense AI is only getting stronger. But of course, you got to look at the fundamentals, and Palantir, right? Don't exactly match up. But if you think that this is a durable trade, maybe that's an interesting side of the AI trade still to be explored.
I think the problem is semis, utilities, power, the whole AI trade's worked off the lows.
Yeah, and it's continued to work.
And I think it's because 2026 is going to be the year of the proof case, right? We're going to start seeing some of the investments hit the margins of companies. And so the reason it's hard to get too negative during a soft spot, if there's a pull forward demand from tariffs or if companies are hit by tariffs, is I'm still playing for the same thing I've been playing for 2 years, which is all this investment starting to help the earnings and productivity of the companies. And so maybe 2026 is a better earnings year than people think. Maybe 2025 is a little worse, but people just want to buy the dip every time because they're like, it's still in front of me, the dream of the productivity. And so I think that's why it's hard to get too negative when you still have this kind of, let's call it a 10-year trend that we're about to see the fruits of in the next 18 months.
So that's the ecosystem that we're talking about. But let's not discount NVIDIA. NVIDIA is the picks and shovels behind all of this. They're powering all of AI health. And for that reason, they're doing things like looking at bone scans, MRIs, and analyzing them and making sense of them in half the time with twice the accuracy.
We've also been helped by this sort of re-ignition of the AI trade.
Yeah, absolutely.
NVIDIA CEO last week was all across Europe making partnership deals with a bunch of companies. I mean, there's a lot of buy-in that the AI trade is not over.
I think that's right. I think we were reinvigorated by, kind of call it the sovereign AI trade. We were reinvigorated by the reality that from NVIDIA's numbers, which came really well after the big move in the markets, we had a chance to really not only hear reaffirmation from NVIDIA, but we haven't heard anything different. In fact, the hyperscalers have kind of doubled down. We've had a couple of data center and kind of energy deals around AI energy demand, and we've heard from Constellation, we've heard from Microsoft. So, I think that's all very important, and the market needs this leadership to go to all-time highs. It doesn't mean you can't have a great market without the tech leadership, but I get back to, and if you're doing relative kind of performance trades or doing those graphs at home, if you graph the triple Qs by the SPY, you get to the high we were back in July, which is essentially 0.89. We're almost right there again, which would mean, could you be getting relative leadership by the group that really takes you higher? The outperformance by semis from the low of markets from April 8th is about 23% to the S&P. That's all you need for markets to continue to move higher. Doesn't mean that I think you don't think about all the things we think about every day in terms of where AI and DeepSeek, and really post-DeepSeek, the world's a different place, and yet it's not.
Yeah, it's notable, though, 4 of the Mag 7 are still down in the year. Apple obviously trades very poorly. Google trades very poorly. Tesla trades very poorly on a relative basis, right? And so they've come a long way. When Tim just mentions the ratio of the S&P, relative to semis, semis have doubled up the performance of the S&P 500 off the bottom. The NASDAQ 100 is up about 32%. And I guess you got to ask yourself, what's the What's the thing? What is this not discounting, right? And so at this point, it's been a tremendous rally in such a short period of time. But, if you look at a Meta, here's a great example that everyone loves it. Karen loves it. And, I look at this, consensus expectations for earnings and sales growth are basically 13%, right? And so I say to myself at 24, 25 times, it's really not that cheap. You said margins are beautiful. They are beautiful. They're 81% or something like that. So I think that you have to make a bet that we're going to have earnings revisions higher for these groups. And you might. That's the thing. If you start to get these kind of return on investment and these use cases and all this stuff play out, I'm still a little skeptical that that's a 2025 thing. And maybe you see earnings revisions higher, and maybe Meta does prove to be really cheap. Maybe Google gets by some of these headwinds, and that is the cheapest one. I'm just not so certain right here.
Well, for Meta, I think they are just spend right now. And this multiple is off of a run rate of spend. So if at some point they will slow down the relative spending, which I believe will happen, and the efficiency starts to come through, then I think that Meta will look very cheap here at some point in the future. Not that distant future.
All right, I hope you're all doing great today. Today was a nice day throughout much of the market, including for NVIDIA stock, which finished the day nearly 2% higher. We got many positive announcements from NVIDIA out of Europe last week as Jensen traveled around Europe and spoke on multiple occasions. As Jensen said on NVIDIA's earnings call, he expects sovereign AI to be a major growth engine for NVIDIA moving forward, and that definitely appears to be the case after what we saw last week. As a reminder, Jensen told us on stage at GTC Paris that there are 20 large-scale sovereign AI factories that are being planned in Europe right now, as well as many other data centers being planned by European companies. Jensen expects Europe's computing capacity to 10x in just 2 years, which is massive. When speaking about the data center projects that are being planned, Jensen said that data centers are expensive, saying, quote, $50 billion, sometimes $100 billion in the future. Yes, it is unfortunate that NVIDIA had to take all China revenue out of their future forecast due to export controls. But the good news is that demand is so strong that NVIDIA is growing anyway, and sovereign AI deals from places like the Middle East, Europe, and other regions around the globe can help offset what NVIDIA is missing out on in China. That being said, about half of the world's AI researchers currently live in China, and so that is a challenge. But from a demand perspective, NVIDIA's loss of China sales can be offset by other regions around the globe. Looking ahead, we have NVIDIA's annual meeting of stockholders scheduled for Wednesday, June 25th at 12 p.m. Eastern, 9 a.m. Pacific. I remain bullish on the long-term future of NVIDIA, especially after all of the great announcements we got last week. And in case you're watching this channel for the first time, I was bullish on NVIDIA when it was sub $100 per share, and I'm still bullish on it now. I'm not bullish on NVIDIA simply because the price is going up. Rather, I am bullish on NVIDIA because of the fundamentals, both financial and technological, and I seriously think NVIDIA has a lot of runway ahead of it. The long-term thesis remains intact and continues to grow stronger. Blackwell production has ramped extremely fast, representing 70% of NVIDIA's Q1 data center revenue. Blackwell Ultra is set to launch around the end of this quarter and should ramp very quickly. Jensen told us last week that GB300 is, quote, completely in production, and that Blackwell Ultra is right on schedule. The production ramp should happen very quickly as Blackwell Ultra is simply an upgrade of the chips within the Blackwell system. It's not a complete system upgrade like Blackwell was. After after Blackwell has ramped, we should see margins return to the mid 70% range late this fiscal year. And on top of all of this, we have shipments of NVIDIA's next generation Rubin expected to begin in early 2026. NVIDIA maintains their competitive moat across both hardware and software, and I think NVLink Fusion actually strengthens NVIDIA's moat as it increases the likelihood that customers will remain within NVIDIA's ecosystem. We learned a lot last week about how NVIDIA is going to play an important role in the future of quantum computing. Jensen said that the next generation supercomputers will have a QPU assigned with QPUs connected to GPUs. Just as NVIDIA used their GPUs to speed up CPUs, they are now going to do the same with QPUs. And NVIDIA continues delivering performance increases that are so significant that their customers have no choice but to continue purchasing NVIDIA's latest products in large quantities. If Jensen Huang is correct in his prediction that the world's computing capex will reach $1 trillion annually by the end of this decade, then that would mean NVIDIA is going to be worth substantially more in the future than it is today. And so, all things considered, I continue to be bullish on the long-term future of NVIDIA, and I genuinely think this company still has a lot of runway in front of it. At least that's my view of the situation. Remember to stay calm in this market. Remember to maintain a long-term perspective, and do not make any hasty or irrational decisions. With all of that being said, I hope you all have a great rest of the day, and I'm curious to hear your thoughts about NVIDIA in the comments below. Please leave a like on this video so more people will see it. And while you're down there, please consider subscribing. It's free, and you can always change your mind. Thanks for watching, and hopefully I'll see you in the next video.